Hi friends, when I say ugly shoes, what is the first thing that comes to your mind? Was it Crocs? Be honest now. Those are some controversial choices to cover your feet with in public places. Some think they are cool, some think they are ugly, but what is not ugly is Crocs stock at the moment, the company itself. Let's take a look. Here, let's have a look at the Crocs stock chart from last 5 years. As you can see, the January 20, when the corona crisis started, you can see a small dip there with Crocs stock, but then a huge climb up right until the end of last year, and then we went to over $150 prices with the stock, and then when the year 2021 was about to end, and especially during this year, you can see a huge crash with the Croc stock from 150 levels to levels of $60 where it stands today. So when you look at this stock chart, it looks like you're any other meme stock almost. Huge volatility, unbelievable movements with the stock price, but never mind that. $60 level where we are back now seems pretty interesting, and the Croc stock with these prices seem way more interesting than with the prices above $100. So let's dig further deep into this stock. So I saw two investors among the circle of investors I follow myself being relatively bullish on Croc stock and speaking about it. So I decided to take a look myself now. And indeed, there is potential in those ugly shoes. Let's start with some good things around the stock, some bad things around the stock, then conclude with my valuation on Crocs, as well as Arctic Money criteria and ranking. Let's begin. So let's start off with the good things around the stock in no particular order. Crocs is definitely a recognizable brand, so brand mode Crocs has to some extent, even though I know copycat products exist and surely will exist in a larger scale also in the future. Also, I like the product mix of casual Crocs, you know, the regular Crocs they are selling, Crocs at work, so Crocs meant, for example, nurses working at hospitals or chefs working at restaurants. And now the casual shoe brand Heydude that just was acquired by Crocs. We talk more about that a little bit later. Also, another thing to like in Crocs is that Crocs is selling via two channels. There is wholesale and there is direct to consumer. So basically wholesale is selling through other shops in physical locations, and direct to consumer, it might actually be Crocs' own stores to be on. Yeah, they have own stores, so it's Crocs' own stores, or then more importantly through online, through their own website. And the importance of direct to consumer is growing in relation to wholesale all the time, and this is an excellent thing because basically Crocs is cutting the middleman out from the chain of selling, and this will lead to higher margins for Crocs itself. So this is a good development that has been happening for a long time and seems to be happening also in the future. Also, it is good for the brand image too that Crocs seems to have the luxury to choose which resellers will sell Crocs, so they can control the brand image better, which can only be a good thing in the future in my opinion. Well, those were the main good things I see in Crocs myself. Then there's obviously bad things we need to discuss. There's some controversy which might contribute to Crocs stock's recent decline also with the broader economic environment, and this is the Heydude acquisition, which many analysts or some people seem to think that they overpaid for Heydude. Although the management itself, when listening to their earnings calls, they seem bullish on the acquisition, and of course don't think they overpaid too much for Heydude brand, but this remains to be seen obviously. But you know that anything negative news around Heydude shoes sales that will come in the future will hurt the stock price because everybody's watching it now. On the other hand, if the management can execute the same great playbook as they did with Crocs, with Heydude also, then we will see the stock price climbing up. So we will see, only future will tell. Also about the Heydude acquisition, Crocs funded the purchase of Heydude with 2.05 billion in cash and 450 million in Crocs shares issued to the founder to the founder of Heydude brand, Alessandro Rosano. And with market cap of 3.74 billion today for Crocs, you understand how big deal this acquisition of Heydude really is. It's huge. And I would say that the management better get this one right, or they might be ex-management soon in the future. Now, I admit to you that I'm not expert in debt, corporate debt, but when I try to listen to people more intelligent than me, they seemed quite convinced that with the cash flows Crocs will be able to pay back this huge debt, and the huge debt the company has now will not be a problem. It is a significant risk, debt always is, but people more intelligent than me seem to be convinced that with their cash flows, Crocs will be fine with this one. So definitely a risk, but a manageable one. So I guess we just need to trust the management on this one, that they really can pay down the debt and they know what they're doing with this one. Then obviously you have all the macro concerns weighing on the stock this year, as with many other stocks. You have inflation, war in Ukraine, supply chain problems from China's COVID lockdowns. These are real problems for all companies, but especially for retail companies like Crocs, I think, because retail will get hurt when people don't have money to spend. That's the nature of retail business, and I'm afraid it's a big risk for Crocs too, as company, the kind of company they are working in retail industry. Finally, I need to state that whenever investing in fashion, one needs to apply big margin of safety. Trends in fashion change so fast that it can be tricky for us investors to navigate in these retail waters of investing. But that being said, Crocs are ugly shoes, right? So they are not fashionable, at least they want to be fashionable, and fashion I know they want to be, but many people would say that Crocs is not fashion, but people still buy them, so maybe Crocs is more resistant to competition in the end than one might think at first. This remains to be seen too. Let's turn to valuation now. Let me show you via ticker.com some valuation metrics that can indicate us that there is potential with Crocs. So here you can see from ticker.com the next 12 months price to earnings ratio for Crocs itself and some competitors I have highlighted that I felt like could be the best benchmarks for Crocs. So we take a look at Adidas trading at price to earnings, next 12 months price to earnings ratio of 18.58. We have Deckers with 14.83, and we have Skechers at 12.93. And when we look at here below Crocs, it trades at 5.7 next 12 months price to earnings ratio, which is significantly lower than the competition right here. And if we take a similar metric to price to earnings and check out next the next 12 months total enterprise value to EBITDA, you will see Adidas trading at 11.21, Deckers at 9.68, and Skechers at 8.65. And when we turn again here below to Crocs, you can see that Crocs is trading at 6.5. So looking at these metrics, traditional metrics, these could imply that there really is value in Crocs according to these metrics. And what is my valuation for Crocs, and what is my buy target for the Crocs stock? Let's discuss that next. I have to say, making this valuation was a bit messy for me due to Heydude acquisition and uncertainty around it, as well as the fact that I need to apply a big enough margin of safety due to the nature of retail business and changing consumer preferences when it comes to fashion industry. Nevertheless, after taking this big mess, also known as my discounted cash flow calculations, I ended up, after many twists and turns, with cash flow growth and margin of safety to the following buy price target of $54 per share. Today Crocs is trading around $61, $60, so it could really be a big buy already now. It most definitely can go up a lot from here and never see $54, but I am going to be very strict here due to the industry they are operating at, as discussed already. $54 is a good deal in my opinion, and I will buy pending nothing big happens with Crocs stock meanwhile, after publishing this video. or nothing big happens with any of my other positions I already hold. Now I don't have too much cash available at the time. I have cash, but not too much. So if something big happens in the market, broader market, some trade-offs might be needed to be made. If we see the stock market overall just moving lower overall for some reasons unknown to us all now. As said, I could prefer other stocks in my portfolio over Crocs in this scenario, but if all goes good and Crocs hits that $54, I want to open a small position myself in Crocs. Investing is always dynamic, things change sometimes very slowly and sometimes very quickly, but remember, most of the time things change really, really slowly. So, anyway, how much would you be willing to pay for those ugly shoes? Let's conclude now with the Arctic Money criteria and let's see how Crocs ranks against other stocks I have analyzed earlier. Remember, the points in the ranking are assigned at the time of making the analysis, so naturally things can change over time and so should the points and rankings naturally, but I don't update the ranking myself. It just tells you how I saw the stock myself at the time of analyzing it and at the time of publishing this video on YouTube. So not gonna update it, so always remember that when looking at this ranking. Still, it gives some sense to me at least how should I prioritize the stock compared to others I have analyzed. So nice little bit of extra information there that I like to keep. So here is the Arctic Money criteria on Crocs. And as you can see, let's start with from the top. Do I understand the business and the industry? I'm gonna give a full 5 points. It is retail industry. I have experienced myself in retail industry and I'm pretty confident that I understand retail companies myself. So I'm gonna go and give a full 5 out of that one. Next, does the business have moat? 0 to 5 points. I need to give only one. The 1 point comes from the brand moat of Crocs itself, the Crocs brand. That's a 1 point. That's a 1 point brand moat, but I'm not gonna give any more because, to be honest, I don't think they have much more moats than this brand, at least so far as I know. But when investing, you need to remember that not always you need to have big moat. Obviously, you always want to be looking for those companies with big moats, but sometimes you can find bargains, cigar butt style investments, as Benjamin Graham would say, that basically don't have much of a moat but are trading at prices that are too low for the stock. So it's tricky, but sometimes you find these companies that don't have much moat but are still good buys. That's what I'm trying to say here. Okay, but moving on. Does the management team and the board have skin in the game? I'm gonna give 3 points out of 5 because they do seem to have. Let me show you a picture here of the leadership team. And as you can see, the CEO, Andrew Rees, has actually 1.86% ownership of the company, 70 million. So that is skin in the game, actually, big time. So that's what I like to see myself in leadership team. They do have skin in the game. And when you go down the list, look at the other people in the leadership team, you can see that they also own, well, let's say Michel Poole, the president, and Daniel Hart there below. They have 16 million, 11 million of their own money in the company. 0.3%, 0.43%, not that much, but at least they own something in the company. And this is what I basically need to see in a leadership team. I definitely want my leadership teams to have skin in the game, and they do seem to have. So let's return back to the criteria. And next are insiders buying the stock, 0 to 5 points. I'm gonna give almost full 5, but not quite. I'm gonna give 4, because let me show you here in this graph. First of all, insider trading volume. By the way, these nice charts I'm showing you now are from Simply Wall Street. Great website for analyzing businesses. So here you can see the insider trading volume. As you can see, 6 to 12 months ago, lots of selling happening well, not lots of, but some selling happening when the stock price was really, really high. So it's natural that people who know the valuation of the company would be selling when the price is too high. But now let's see the last half years, last 6 months, you can see that there has been not any selling happening, but insider buying happening. When the stock price naturally has crashed during the last 6 months, insiders have started again buying. So I would say that never trust the insider trading volume alone, but this is definitely not a bad sign to see insiders buying the stock. And let's check more closely here about the buys in the next chart. You can see that, yeah, last year, 21, you can see Mr. Ian Bickley actually selling quite a lot the stock, and when we take a look at what prices he was selling, 156, 168, 177, yeah, I think Crocs was overpriced at the time, and it's natural Mr. Bickley was selling. But when we look this year's May, you can see Mr. Bickley starting to buy again with around $60, $58 share price, so $2 lower where it is trading today. So about these levels, stock price levels, Mr. Bickley started buying again, and yeah, it seems that Mr. Bickley knows the worth of the company he's working for pretty well, I would say. Of course, never trust one person, insider selling, insider buying, but when you see this many people from leadership team and the board buying the stock, let's just say that it's not a bad sign. Okay, well, back to the criteria. So insiders buying the stock, I will give 4 points for that, and we move on to the next criteria. Are super investors buying or holding the stock? I'm gonna give 0 points for that, because nope, I didn't find any super investors buying or holding the stock, so naturally 0 points there. And then we move on to the next point. Are people who I follow buying or holding the stock? Well, 2 people as I already earlier said in this video, 2 people among the circle I follow were discussing the stock. Both were quite bullish. The other one was buying already, and the other one is thinking of buying, I think. The last time I checked up on those 2. So let's give 2 points out of 5 there. This has made people aware of the Crocs stock recently with the price decline. So 2 points out of 5 is a good one there. And then finally, we checked the most important criteria out of this all: discounted cash flow, the intrinsic value. Is the stock undervalued at the price levels? So if I consider that 10% return annually would be achieved basically with around 10 points in this criteria, I think you could do even better, probably, maybe, with this stock. So I'm gonna give a pretty good, pretty high 13 points out of that. So yes, I think the stock is undervalued, but as said, I need to see the stock price moving a little bit lower still, due to the fact that they operate in retail industry and fashion. Consumer preferences on fashion change so quickly. So I'm gonna give 13 points, but as I already said, the valuation needs to improve a little bit. The stock price needs to go down a little bit though, but let's give it 13 points for now. And this totals up to 28 points out of the maximum 50. And let's see how that compared to other stocks I have analyzed, I have included in this ranking, Arctic Money criteria ranking of mine. And here you see the ranking. Crocs will land to the position number 5 with 28 points. Right behind Flow Traders, which I own, 29 points there. All you can see in green are in my portfolio at the moment. I own these companies on the green side, and as you can tell, Crocs is pretty close of also in the points, also in my valuation of being a buy, but not quite yet, but might be soon. Same could be said about Meta platforms. I don't own Meta yet. I'm waiting Meta to go around $170, as I told you in my Meta platform stock analysis video. It hasn't hit that yet, that buy price target of mine. Same goes with the Crocs now, so I'm paying relatively close attention to these two, Meta and Crocs. And let's see if they end up being part of my portfolio in the future. So that was it, the Crocs stock analysis. Please subscribe to the channel to show your support, and I will keep making these videos also in the future. Thank you for watching this one, and I'll see you in the next one. Bye bye!